Hello again, traders. Doing job here from Drfx, Swing Trader Mentoring. I'm going to be taking a look at a few currency pairs that I think could provide us with trading opportunities over the next couple of days based on the signals and patterns that have been formed so far on their respective daily charts. Now, as part of this analysis, what is done is to identify whether or not the currency pair that we're looking at is either in the process of forming a consolidation setup or has already completed the formation of a consolidation setup. Now here you can see in this graph taken from my trading manual, which basically is an illustration to show the setups, where what we do is to identify the early set of waves that indicate that the market is going to be forming consolidation. So what we do is identify the early set of bearish and bullish waves that typically indicate that the market is going to be forming consolidation. Once these are spotted, we can trade them and continue to capture strong trading gains until the consolidation has been finally completed. Of course, once the consolidation has been clearly formed, we will then continue to trade with this approach, with this technique, and trade between the boundaries of resistance and support until the breakout finally takes place either above resistance or below support. Now, as part of the trading approach that is done, what we do is identify market direction based on the signals provided by the daily chart and the forward chart. And once a trading opportunity has been identified, which in most cases is going to be done within the context of consolidation setups, whether they're either being in the process of being formed or have already been formed. And what we do is to enter using the signals provided by the forward chart. And to protect the trade, what we do is to place our stop loss at a strong area on this time frame that will allow us to stay in the trade and remain in the trade until the trading target has been hit. Of course, what we do is identify the best and the strongest candlestick formations that indicate that the market is going to be moving from one end of the consolidation to the other, as well as to provide us with the entry signals and indicate when it is actually the right time to start trading in the indicated direction. So these are the signals that you would typically see within the context of consolidation setups: double bottoms, double tops, ABC signals, morning stars and evening stars, as well as bullish engulfing and bearish engulfing candlestick signals. Now, as you can see here on the US Japanese yen, based on the signals that have been provided so far on the daily chart, it definitely looks as if a consolidation is being formed on this time frame. So as you can see here, the U-turn has taken place recently here. And, the market did not really respond to this as much and is now pulling back slightly. But assuming that this consolidation setup is going to be completed and that we're going to see the market head down towards this area here, then this pullback could be temporary ahead of a sharp reversal, bearish reversal, that continues the movement bearish and down towards the support area. Once it reaches this area, it is expected to then U-turn, rallying and head towards the resistance boundary here that has already been completed. Somewhat similar situation on the Australian Japanese yen. Also in the process of completing the formation of a range consolidation setup. In the case of the US Japanese yen, it looks as if it's forming a pennant. However, in the case of the Australian Japanese yen, it looks as if it's forming a range consolidation setup where we have horizontal boundaries of resistance and support. So you can clearly see here that the support boundary has already been formed, and we're now in the process of completing the resistance boundary, with this first resistance point being formed and the second resistance point now in the process of being formed. So what we're going to be needing from the market here is a downtrend that starts with a strong bearish signal in this area here that indicates that the market is going to be completing this movement and head towards this support boundary once again. Pound US dollar also looks as if it's going to be forming a consolidation based on these sharp bearish and bullish waves. Once you generally see these types of sharp bearish and bullish waves in close proximity to each other, one right after the other, then it's a very strong indication that the market is going to be forming consolidation. And so what is going to be done, or what is going to be needed here, is for the market to U-turn and rally with a strong bullish signal that would take us up towards this area here, where it will then U-turn and form another bearish wave that would complete the formation of this resistance boundary, and in so doing complete the formation of this consolidation setup. Aussie US dollar, similar setup as the one that we saw in the Australian Japanese yen. Here we see that the market could be in the process of forming a range consolidation setup. Support boundary already formed here with these two major support points, this being the first one, and even though this is a double bottom formation, together they are considered to be one support point as part of the formation of the consolidation setup. So the support boundary has already been formed. One resistance point has been formed here, and so what it looks as if what is taking place is that the market is gradually U-turning here to form the second resistance point and start another downtrend that would take us down towards the support boundary and complete the formation of this consolidation setup. Euro US dollar also looks as if it's in the early stages of forming a much smaller consolidation compared to the ones that we just took a look at. Sharp rally took place here, followed by this U-turn signal here, this bearish engulfing candlestick formation. And so assuming that the market is going to be forming a consolidation, then it is going to produce a strong bearish signal that would provide us with a bearish wave, followed by a rally and additional waves and U-turns at this area here that would complete the formation, that would indicate the continuation of the formation of a consolidation setup. Similar situation on the US Swiss franc, but in the opposite direction. Of course, you know that the Euro US dollar and the US Swiss franc are inversely correlated to each other. So a bullish signal on the Euro US dollar is complemented in most cases by the opposing signal on the US Swiss franc. So here we see a similar setup where the market looks as if it's forming a range consolidation setup on the daily chart. Recent bearish movement has been completed. So assuming that the market is going to be forming this consolidation, then it's going to be rallying at this area here and indicating a move that takes us up towards this resistance boundary. So the main aspects of these daily charts that we just took a look at for these 6 currency pairs are that they're either in the process of forming a consolidation setup or have already completed the formation of their respective of their consolidation setup. Naturally, because we're talking about consolidation, then it means that they're going to be in the process of moving towards the opposing support or resistance price points. And to take advantage of these movements, entry is going to be taking place either at the daily signal or the 4-hour signals provided by the market, provided by these currency pairs, as part of the movement towards the other side of the consolidation boundary. Once a trading opportunity has been identified, we then trade towards that opposing support or resistance point and aim to capture a trading gain of anywhere between 50 and 70 pips, and in some cases up to 100 pips, to capture a strong rate of return per trade as part of these movements. Of course, to take advantage of these setups, what is very important is that we accurately identify the boundaries of resistance and support in terms of the exact price points, so that we can ensure that if we're exiting at the resistance or support point, we're exiting at the right place, not too early and not too late. Of course, it's very important, as I said before, to identify the strong stop loss area provided by the 4-hour chart that will allow us to protect the trade and withstand temporary pullbacks until our trading target has been hit. In most cases, these types of trades take between 1 to 3 days. And in most cases, I would think in 9 out of 10 times, they tend to take up to 2 days. But sometimes we have to hold the trade for a little bit longer just to ensure that the larger pip targets are hit. And so we extend the trading holding period to 3 days. So between 1 and 3 days is is a general time period within which most of our trades are hit. And it's very, very important to ensure that we do not interfere with our trades unnecessarily and that we maximize on the trading gains provided by the market. Very important to avoid the temptation to monitor our trades. This bad habit can lead to the temptation to close our trades too early and prevent the market from actually maximizing and preventing us from actually taking advantage of the full advantage of the trade that we're trading. So it's very important to not monitor the trade, close the trading platform, and only check on the trade at the end of the respective holding period that has been set for the particular trade. So gonna be monitoring these currency pairs that I just took a look at, and gonna be waiting until the market provides us with another trading opportunity with a strong signal provided by the daily chart to indicate the start of the movement in the opposite direction that will take us towards the other side of the boundary. So once a trading opportunity has been identified, I will provide a trade setup that will indicate the exact entry, stop loss, and trading target, as well as a holding period that is expected to be needed to ensure that we are able to maximize on the trading gains provided by the trading opportunity. So until next time, traders, happy trading.